I called XRP a scam, and the XRP army came for me, which forced me to question, could I have been wrong? Look, I've dropped videos calling XRP overhyped, misleading, and yeah, I had my reasons. But it's 2026, so have things changed? Well, XRP just pulled in over $1 billion in ETF inflows, faster than any cryptocurrency that has an ETF except Bitcoin. Banks that partnered with Ripple for years with nothing to show, they're actually integrating now. And that SEC case everyone said would kill XRP, they won. So today we're doing something different. We're breaking down every argument against XRP, but we're also looking at the other side. By the end of this, you'll know if XRP is actually worth your money in 2026, or if it's still the same overhyped coin from all those years ago.
Welcome to Crypto Coach Will, where we bridge the gap for everyday investors wanting to build real wealth in crypto. I'm Will Wright, the founder of Mining Store and Imperial Wealth, two of Australia's leading companies in the crypto space. For over a decade, I've helped everyday investors safely and securely set up in the cryptocurrency market so they can build long-term sustainable wealth. In this podcast, we break down the complexities of the cryptocurrency market, everything from investing, trading, DeFi, and even Bitcoin mining. Let's get into it.
So first, let's start with the arguments against XRP. Misleading and false promises for over a decade. Ripple has long positioned XRP as the future of cross-border payments, promising to revolutionize banking with instant, low-cost transfers via its on-demand liquidity or ODL system. However, adoption has been slower than what the hype has suggested. Despite claims of partnerships with hundreds of banks since 2012, many were just pilots or MOUs without full implementation. For instance, early announcements like replacing SWIFT created buzz, but by 2026, while ODL processes billions annually, it hasn't displaced legacy systems entirely. Critics argue this overpromising led to retail investors buying in on unfulfilled visions, with XRP's price volatility reflecting hype cycles rather than sustained utility. The SEC lawsuit, which was actually settled in 2025, further exposed early sales practices as potentially misleading, which actually eroded a fair bit of trust. The next point, Brad Garlinghouse and Ripple lobbying against Bitcoin. Ripple CEO Brad Garlinghouse has publicly criticised Bitcoin's energy consumption and scalability, calling it outdated for payments in interviews and posts. Accusations surfaced in 2025 that Ripple lobbied against a Bitcoin-only US strategic reserve, pushing for multi-asset inclusion to favour their ecosystem. Garlinghouse denied directly anti-BTC lobbying, but his advocacy for a diversified reserve and equal regulatory treatment for crypto firms has been seen as competitive positioning. Through media appearances and DC influence, Ripple has spent millions on lobbying, and this has fueled perceptions of Ripple undermining BTC's dominance to boost XRP, especially because BTC remains the digital gold standard while XRP fights for relevance. No actual real partnerships with banks until recently, which has led to many false promises and misleading headlines. For years, Ripple touted 300 plus partnerships, but many were superficial. For instance, testing phases with Santander or PNC Bank that didn't lead to widespread XRP use. Headlines like Bank of America adopts Ripple often overstated pilots, leading to pump and dump cycles. Only post the 2025 SEC clarity have deeper integrations emerged, such as LMAX Group's $150 million financing deal with Ripple in early 2026, or RLUSD Collateral, or BNY Mellon as RLUSD custodian. Even now, while RippleNet serves over 300 institutions across 70 markets, XRP's role in ODL is optional. Many use Ripple's tech without even holding XRP, making early promises feel exaggerated and contributing to investor fatigue. Aggressive marketing targeting older people with misleading claims, including influencers, price predictions, and promises of overtaking banking. The next point, which I find is probably the most dramatic. Aggressive marketing targeting older people with misleading claims, including these absolutely ridiculous influencer price predictions such as going to $10,000 per XRP token, or the promises of overtaking banking in its entirety. Ripple's marketing has been slick and targeted, often appealing to boomers via YouTube influencers and ads, promising XRP as a bank killer or path to insane wealth. Influencers hyped absurd price predictions such as the $10,000 XRP one I mentioned, tied to very vague narratives like global reset, leading to people FOMOing in among less tech-savvy investors. This cult-like promotion amplified by paid shields has created an insane hysteria without grounding in reality. XRP's utility is strong for payments, but it hasn't entirely overtaken banking, has it? In 2026, with ETFs drawing institutional money, retail still bears the brunt of volatility from these tactics, raising ethical concerns about preying on hope for quick riches. Now, the next point comes down to the tech itself and the beginning of XRP. It has missing blocks and the entire supply being pretty much pre-mined by the owners themselves. The XRP ledger, or XRPL, has a historical flaw. The first 32,569 ledgers from 2012 to 2013 are missing due to a software bug, making the chain incomplete and unverifiable from Genesis. XRPL starts at ledger 32,570. This gap fuels conspiracy theories about hidden transactions or manipulation. Moreover, all 100 billion XRP were pre-mined at launch, holding 55 billion initially, now 34 billion in escrow post-releases. Unlike minecoins like BTC, this centralization gives Ripple control, raising decentralization doubts, and XRPL uses a unique node list of trusted validators not fully open like proof-of-work chains, such as Bitcoin itself. Now for the next point. Where do these pre-mined coins go that the owners hold? Well, actually, they have dumped billions every year onto retail. If they believed in XRP replacing BTC in the banking system, why are they selling, you must ask? Well, Ripple has monthly escrow unlocks, which is around 1 billion XRP, that have been criticised as systematic dumping. Though 60 to 80% is relocked, for instance 70% in December 2025, it still adds supply pressure, i.e. where did the other 30% go? In 2026, exchange reserves dropped to 1.6 to 2 billion from 4 billion in 2025. But critics argue Ripple's sales contradict their XP as the future of finance narrative. If executives like Garlinghouse truly saw XRP supplanting BTC or banks, why not hold more? This has led to accusations of using retail as exit liquidity, especially with XRP's price lagging behind BTC's gains despite utility claims.
Hey guys, real quick. If you've been wanting to earn passive Bitcoin without dealing with the headaches of watching the markets, you've got to check out Mining Store. We help investors buy and host Bitcoin miners in our professional grade facilities. No tech skills, no infrastructure costs, just passive Bitcoin straight to your wallet. If you're serious about building long-term crypto wealth, then hit the link below and book in a call with one of our experts. Now let's head back to the episode.
Now for the other side of the argument. This is the arguments for XRP. And let's start off with the most obvious one. ETF and institutional involvement, the marginal buyer of this cycle, has finally arrived at XRP like it has with ETH, SOL, BTC, and some others. Post the SEC settlement in 2025, XRP's ETFs launch, including Canary's XRPC, Bitwiser's XRP, and Grayscale's GXRP. These have actually attracted over 1.37 billion in inflows by early 2026, faster than any crypto ETF except BTC. This institutional capital is the new marginal buyer, proving steady, sustained demand. Unlike retail hype, ETFs lock up the supply, with reserves falling, reducing volatility and signalling long-term conviction. Analysts like Standard Chartered, that like to throw out some pretty wild price predictions as we know, predict $8 for the end of 2026 for XRP just on the ETF inflows alone, as pensions and funds allocate via these regulated vehicles. Now, that leads me to the next point. Obviously, this means XRP and Ripple are now integrated with larger players. Ripple's partnerships, although in the past have been a little shaky and maybe a bit of a stretch from the truth, have actually matured. They have over 300 institutions on RippleNet, including big players such as SBI Holdings, Santander, PNC Bank, and they've got Bank of America pilots. In 2026, deals like LMAX's 150 mil financing integrate RLUSD, the actual stablecoin, for collateral and trading, while BNY Mellon custodies the stablecoin. Central banks, such as in Saudi, Bhutan, they've been testing Ripple for CBDCs, and Evernorth's 1 billion XRP yield play shows actual real adoption amongst these larger players. ODL volumes have hit billions, proving XRP's bridge asset utility in a $250 trillion payments market is actually doing something. Now for the next part that we all know. XRP has some of the greatest marketing, with strong cult-like meme coin community driving price appreciation. Ripple's polished branding, events like Swell, Garlinghouse media presence, it keeps XRP visible, while the XRP army community, which might be many of you listening, amplifies these narratives on social media, turning majority of the dips of XRP into buying frenzies these days. This is meme coin-esque fervor, combined with ETF hype, has actually drove 25% gains or so in early 2026, which has outperformed Bitcoin massively. Community strength is actually what sustains momentum in a cryptocurrency. It attracts retail while institutions provide the floor, and no other coin is doing this better than XRP right now. Now another cherry on top, the one that I've been mentioning already, the regulatory clarity and non-security status. Everyone knows that the 2025 SEC win confirmed XRP isn't a security on secondary markets, unlocking US listings and ETFs. This clarity, which is actually absent for BTC and ETH in some contexts, positions XRP as a compliant asset for banks. The Clarity Act, which was the huge one that passed in the US, could further enable XRP's payments role in the global payment system today. Now, of course, as a blockchain, XRP isn't just a token. Its blockchain Ripple has technical advantages and scalability. XRPL handles 1500 TPS with 3 to 5 second settlement and sub-cent fees. This is absolutely ideal for payments versus a blockchain like Bitcoin, which is quite slow, or a blockchain like even Ethereum that has very high gas costs in times of need. The 2025 EVM sidechain adds smart contracts, enabling DeFi RWAs, while ISO 20022 compliance aligns with global standards. Now for another technological advantage, supply dynamics and burn mechanism. With a $100 billion fixed supply, falling exchange reserves, and ETF custody, this creates scarcity, something people love Bitcoin for. Transaction burns destroy XRP over time, potentially accelerating with volume growth, and of course the escrow releases are mostly relocked, which minimizes dilution. Now for our last pro before we wrap this up. The broader ecosystem and RLUSD synergy. Ripple's stablecoin, which I've mentioned a few times now, RLUSD, has over $1 billion in market cap and complements XRP, using it in liquidity in ODL. Acquisitions in 2025 enhanced crypto financial services, which actually positions Ripple as a bank itself with Fed access potential. Of course, this should be sustainably driving XRP demand over the future. So without further ado, let's wrap this up. There's no doubt that XRP's got a checkered past with overhyped promises, aggressive marketing, and that pre-mined supply that's raised eyebrows for over a decade now. It's easy to see why it's been labelled a scam by critics, including myself in those prior videos, but credit where it's due. Post-SEC clarity in 2025, the ETF integration, the deeper bank integrations, and that unbreakable community have turned the tide, and price action has followed, and it's actually been a pretty good investment for this cycle. What I will say is this though, it is absolutely not replacing Bitcoin, and it most likely or most definitely won't replace the entire banking system anytime soon. But for cross-border payments and as a compliant bridge asset, it's definitely carving its own niche. Is it worth it? In my view as a head analyst, if you're diversified and you're eyeing utility plays with institutional backing, yeah, you could add a small allocation to XRP if you're a believer, especially with those ETF inflows providing a floor, much like the better performing assets of this cycle. But of course, do your own research, watch those escrow dumps, and don't just buy the hype blindly when it's up multiple X's. I'd like to hear what you guys think. Drop your takes in the comments, smash that like if this helped, and subscribe for more balanced crypto breakdowns. I'll catch you in the next one.
Thanks for tuning in to Crypto Coach Will. If you got value from today's episode, then make sure to subscribe so you never miss the latest tips to navigate the crypto market. If you're ready to take crypto investing to the next level, check out the links below where you can book in a call with my team of experts. We place strong emphasis on educating before investing in the market, so take advantage of the knowledge they have to share. Don't forget to follow us on socials @CryptoCoachWill, and I'll catch you in the next episode.